Land loans aren't your typical home mortgage, and getting one is much more difficult. The first thing you need to know about land loans before you do anything else is what they are and how they're different from a mortgage. A standard mortgage is a loan that helps you purchase a home. A land loan, on the other hand, helps you buy a piece of land so you can build on it. In this video, we're going to cover the difficulties of land loans, types of land, and how and where to get a land loan. So why is obtaining a land loan more difficult? Land loans can be trickier to qualify for. This is because it's harder for a lender to resell a piece of land than a fully constructed house. So down payments and interest rates are usually higher for land loans than for mortgages. So while underdeveloped land is generally cheaper than developed land, it's important to know that financing it can sometimes be a challenge. The upside, of course, is that building your own home or office from the ground up can be really rewarding. Taking this route lets you customize every single detail. Now, let's cover the types of land. The first and typically cheapest land to purchase is raw land. This is underdeveloped land. There's nothing on it, no water, power, sewage, or road. And though it could be cheap, it's worth considering that it could actually cost you more in the long run. From a lender's perspective, developing raw land is the most challenging and thus the riskiest kind of building project. To get the best terms for a loan to develop raw land, you'll need to have a strong credit history and a detailed, comprehensive, and thoughtful building plan. The second type of land is called unimproved land. This property also lacks basic amenities, but represents a step up from raw land. It might have a road, for example, but no water and no power. The third type is called improved land. This is a piece of property that is ready or nearly ready to be developed. It's in the process of becoming construction ready and might have drainage, paving, or other utilities. It follows that this is the most expensive type of land. Now, where can you get a land loan? First, the more conventional route to take would be to get a land loan from a lending institution. But here's an insider tip. You'll probably have better luck with a smaller bank or credit union than a big national bank. For land upon which you'll build an office or commercial facility, you can apply for a loan from the U.S. Small Business Administration. The first in this category is a 504 loan, which provides fixed rate financing or up to $5 million for facilities that promote business and create jobs. You'll have to pay a down payment of 10% if you obtain this loan. Check the Small Business Administration's website to see if you're eligible. Requirements include operating as a for-profit company in the United States with a net worth of less than $15 million and getting an average net income of less than $5 million after taxes for 2 years before you apply. There's also a 7A loan for up to $5 million. This is its most common loan program. Eligibility depends on the nature of your business activity, your credit history, and the location of your business. VA loans, however, cannot be used to purchase raw land. If you served in the military and qualify for a VA loan, those loans have to go toward purchasing a home that you will occupy. It may be possible to use another source of funds to purchase raw land and then use a VA construction loan to pay for building a home on this land. But veterans considering this option should consult with a VA loan officer to make sure their property qualifies. If you're low or moderate income and looking to build in a rural area, you can apply for a loan from the United States Department of Agriculture. The program began as a way to provide financing for farmers who could not qualify for a loan, but has since expanded to including all rural residents. The first type of loan in this category is known as a Section 523 loan. This goes to private or public organizations looking to provide subdivided lots for people who plan to build their own homes. A Section 524 loan, on the other hand, is available to organizations intending to develop a property in order to provide housing to low or moderate income families. The interest rate for these is below market and updated monthly. Both Section 523 and 524 loans have to be paid within 2 years. If you already own a home, you can take out a home equity loan for a piece of land. This basically means you're securing the loan with your house. You don't have to make a down payment, but you do take on the risk of losing your home. If you're set on designing your home from the ground up, but you can't find a land loan option that works for you, another option is to take out a mortgage for a property, perhaps a tear down on a piece of land that you wish to purchase, then tear the structure on the land down and rebuild it yourself. This does have the potential to be more expensive. And lastly, you'll find some sellers that will do an owner-carry arrangement, whereby with a down payment, you can pay installments directly to the owner until the purchase price is fulfilled. Before you choose a financing option, make sure you have a building plan for the land you're looking to purchase. You'll need to show that you've thought through the plan and you're not planning to build your building yourself and that you've hired builders to do the work for you. Lenders want to be sure that you'll be able to complete your construction project. A strong building plan and good credit history are essential if you want to qualify for a land loan with favorable terms. eForms is the largest database of official legal forms, including agreements for land contracts. Click the link here for fillable land contract templates and click below for even more information on land loans. You can also access business planning documents to help you with the pre-application process.